Thank you for being with us here last session. I promise we'll be very brief. The topic is on institutional money flowing into crypto, but we will also discuss with Matteo, Andrea, and Ivana about what their personal experience, what they do, and maybe Ivana, you want to start? You're help me with your Chief Genius Officer. I like that. And tell us what InterCapital is doing.
Okay, so I come from InterCapital Digital Wealth Management.
Yeah.
And basically why Chief Genius Officer? Because we are developing Genius by InterCapital application for robo-advisory portfolio management.
Okay.
So what brings me here is basically that we were the first one in the region to introduce crypto, mostly Bitcoin, into asset allocation within the portfolio management model.
And you're not a crypto exchange, but you're a normal
So no transaction execution. So the our clients give us money and then delegate portfolio management to us. And we make the portfolio decisions for them.
Thank you, Ivana. Maybe Andrea?
Yes, absolutely. At Colossus Digital, we help institutions access... Colossus Digital.
Yeah, Colossus Digital.
We help institutions access on-chain yield securely and in a compliant way.
So your business is custody or?
No, we connect custody to on-chain yield opportunity.
Okay.
And we'll...
Matteo?
Fortuna Custody. Fortuna is a regulated digital asset custodian in Ireland. We had before a VASP license under the VASP regime. And now we are going through all the MiCA and payment license process still in Ireland. So we mainly focus on institutional money and token foundation money. And our main focus is actually also like non-EVM chains. So that's why also we're here at Cosmoverse.
So, but you are a crypto native?
I am crypto native.
Yes. But you...
My background is in traditional finance. I was a hedge fund manager and I could not access on-chain yield securely from custody. So I sort of tapped a few of my partners and asked them to find a solution, and that's how Colossus was born.
So what we see is that institutional money enters blockchain, and you have also been with UniCredit, correct me? Yes, many years.
Yes, I spent...
Not so many, but some years.
Yeah, well, 8.
8.
I call it many.
And now InterCapital has a cooperation kind of with JP Morgan, which is also kind of institutional. How is how do you see that institutional money is going towards crypto?
Okay, so the cooperation with JP Morgan is not really related with the product that we have related to crypto.
Yeah.
How it's moving from our perspective to crypto, we are basically making a decision to invest into Bitcoin, part of their portfolio, client's portfolio.
Okay.
Well, we used ETFs, of course, to do that, which made it possible for us to join the crypto and Bitcoin asset allocation. Why we do it? Because, it has become very interesting from, of course, risk-reward perspective. Bitcoin and everything else when we talk about asset allocation. Why Bitcoin? Because it has this narrative of store of value, of course, and it wants to become digital gold and store of value. It's still not that. It's still risk on asset. It's still very volatile, too volatile to be called digital gold. But as long as the probability of it becoming a digital gold is rising, it has a lot of potential to keep overperforming other assets in the long run on average. So this is why we want to have it in the client's portfolio.
That's what, but also because maybe clients want that, is it?
Well, they would not opt for the service if they wouldn't want it.
And I downloaded this Genius app. There is this Genius. But only it's for Croatians. Sorry, it's only for Croatians.
Yes.
But my Croatian is bad. Samo malo govorim. But it actually, this is a robo-advisor. Does the robo-advisor also advise you to invest in Bitcoin?
Well, basically what it does. So if client wants the robo-advisor, which includes crypto, we will allocate up to 8% into Bitcoin based on client's risk profile.
So if you have 10,000 euro and you want to invest, and then it would not go beyond 8%.
Exactly,
okay.
exactly. Why we do it? As I mentioned in the beginning, we are portfolio managers, so our clients are dominantly either clients who don't have knowledge or time to engage into trading, or clients who do engage into trading and they are trying to become very rich very quickly in crypto, but they still want to have a long-term managed portfolio that they want to have on autopilot, and they don't want it to be speculative.
I see.
It's a long-term. So these kind of clients want to have part of the portfolio allocated into Bitcoin to be exposed to overperformance, but then still, if things go south, when things go south, the downside is always limited. This is why we keep it limited and diversified.
Okay.
Okay.
Andrea, do you have for customers solutions or with crypto?
Yeah, so most of our customers are institutions, or all of our customers are institutions.
For instance, is it banks or is it pension
traditional
funds?
banks? It's traditional banks, it's traditional asset managers, but it's also crypto exchanges. Anybody who is holding assets and want to earn a yield on these assets in a secure and compliant way, they need to connect from custody to on-chain yield.
Okay.
And that is a technically complex process, and there is also a significant regulatory risk. And we cover these two aspects, thanks to our proprietary technology and the regulatory framework that we work under.
So if I'm a bank, let's say the CryptoRobby bank wants to have some Bitcoin, maybe a lot.
So first and foremost, you would need a custodian to start with, or a custody solution that you can
That would be Matteo.
That could be Matteo. So
by the way, isn't your company also a custody provider of this conference?
Yeah, we are. Yes.
Okay.
So exactly. So actually, this is a perfect example. So say that Ivana wants to hold some digital assets, on, you know, and then she needs the custody of Matteo, but then she also wants to earn a yield on these assets. So she needs our connectivity from Matteo to the on-chain yield, which could be either native staking or DeFi, or in some instances, and Bitcoin is a great example of this, collateralized loan.
And that's
what we do.
Provide.
And we provide this both from a technical perspective as well as a regulatory framework perspective, because traditional financial institutions, they want to face so-called eligible counterparties. So other companies that are as regulated as they are, so that they can rely on the AML, KYC policies and regulatory framework of the counterparty to be safe.
You have the regulation from, based in London?
I'm London-based personally, but the company is based in Switzerland. And we're about to get the financial intermediary regulation in Switzerland, and then we're working with the Swiss regulator to discuss further regulation, which is still under development. And our idea is to be regulated in Switzerland and in Europe, and then potentially in other markets to offer this kind of service in a regulated fashion.
When you these staking services, where do you see the most of the future? Which the product lines you mentioned, staking and other different lines?
So I would say that the way institution thinks is pretty straightforward. They think in terms of size. So obviously, the bigger the asset class, the more interesting it is. So obviously, I don't think it's a coincidence you talk about Bitcoin, because obviously that's 60% of the market, whatever. And so obviously Bitcoin doesn't have native staking, as everybody knows. So to earn a yield on Bitcoin or to do something with Bitcoin, you have to access DeFi in some shape or form, and that's one of the things that we're helping with. And also other asset classes in terms of size. So of course you have Bitcoin, you have Ethereum, you have stable coins, and some of these have, for example, Ethereum has native staking and restaking and other liquid staking and other protocol. Then you have obviously Cosmos chains that have native staking and other kind of on-chain yield, and stable coins usually generate yield via DeFi. So we provide secure and compliant access to these solutions.
Okay, compliant brings me to Matteo, because you mentioned MiCA and that you are about to get MiCA. What's the experience?
Tough, I would say. Like in Ireland, also like the VASP regime was tough. Like with the VASP regime, basically like it was a legislation. So there was no harmony among like the European countries, let's put it this way. So you could go to some countries in Europe and get the license for 10, 15 or 50K. But in a day or in a week, basically. But in Ireland, like it took us like 18 months. So the licensing regime by the regulator was really tough, just already like at the VASP level. And at the MiCA and MiCA level, it's very tough. I have to say.
It's very tough, you say. And you do it in Ireland?
We do it in Ireland, yes.
And how is it with the Irish, MiCA regulators?
I would say the Irish regulator has been helpful in a way. Like they want to understand the business and the business model of companies getting regulated in Ireland, so that's a good thing.
Yeah.
But it's more of a education process also, because like they know about KYC and AML, which is what they know. But when it comes to technology and when it comes to custody, it could be like HSM, so hardware technology, or MPC, so multi-party computational technology. It's something that you need to explain to them how you do it. You need to explain to them how the keys are getting stored, how the private keys are getting stored. You need to explain to them how you secure the assets.
And that's what you do.
And that's what we do.
You're explaining, interesting.
And that's what
the
we
Italian
need to explain.
In Ireland to
But
the Irish.
I have to say that compared to other regulators in Europe, they've been helpful.
Okay.
And especially for smaller companies, which we heard it wasn't the case in other countries in Europe. So that has been good for us, I would say.
I have also some experience because we also apply for MiCA with Validvent in Austria, where also Bybit got the license, for instance, and other Bitpanda, other exchanges. And I can share that they are actually they're not hostile. They're also humans on the other side, and they know about blockchain these days already, surprisingly, but it's refreshing. And that's the question to all of you. When you see these institutions entering the business, we had hacks, and we had from Oak, there was a security expert, just 2 speeches before we entered here. He said these hacks, Bybit hack, we had FTX, we had Luna. What if tomorrow, 1st of November, there's a big hack, I don't know, Binance gets drained or Bybit again or something. How would you see that institutions, would they then leave the market as it was in 22 the case? I saw Red Bull, we had a cooperation a long time ago with Red Bull. They had cooperation with some blockchain project, Tezos for instance. They immediately canceled the cooperation. Do you see that a big incident could harm that and that they flee and that the institutions say, no, we don't like that? Or would you say institutions, they say, okay, we could go further? How do you see that?
Well, from my side, I think it's a very philosophical question.
Yeah.
But, I mean, it would harm the trust, for sure.
Yeah.
But I don't think it's a 1 or 0 call.
Yeah. Okay.
So it would maybe decrease the speed of institutions coming in. Maybe it would also decrease the participation as it is now. But I don't think it would completely erase it.
Okay, so
it would harm it
here
severely.
To stay.
Yeah.
Any other thoughts?
I absolutely agree. I think it's here to stay. I think the size of the market is now big enough for this to stay. I think that the players that are involved and the way regulators and government have dealt with this, especially, I guess, the US government, is created this framework which is unlikely to go away. What I also want to say about hacks and frauds is that I have not yet encountered a blockchain fraud which would have not been preventable if blockchain was regulated in a similar way as traditional financial services. So my favorite saying is new technologies, old sins.
Yeah.
And I think that's what we've experienced. So all of these, especially recent cases, they're all either consequence of lack of regulation or poor, let's say, processes and procedures which would not be accepted in traditional finance. So
what you're saying is, because we don't have these good regulations which banks have, these things happen still.
But now that we're starting to have it, I think the likelihood and the impact of these scandals will be less and less.
I would say it would definitely harm. The good thing is, as you mentioned, is regulation. Like, for example, MiCA comes with DORA, which is the Resilience Act. So that is, you need to put more effort in securing your infrastructure if you're regulated. So that's definitely a good thing for the future of the market. But I just want to point out that, I don't know, if you look at the Bybit hack, a few months ago.
Yeah,
Or
in
the
May.
Swissborg and Kieln hack.
Yeah.
Those hacks were at the Web 2 level, so the API level or the front-end level.
Yeah.
They were not at the blockchain level. So the blockchain as infrastructure is probably like the most secure infrastructure that we have. I don't know, like, have you ever seen like validators getting slashed? Probably, I don't know, maybe like just a few times in 12 years.
Yeah, it's rare.
Or 11 years. But so I would say like most of the hacks still happen at the Web 2 level rather than the Web 3 or blockchain level. So that's a good metric for the blockchain or crypto people, I would say.
Interesting. When now we talking about institutions, you're from smaller companies, I guess. Is it or small and medium size? But you consider still small or medium. How about InterCapital also? We have the big players, BlackRock and then JP Morgan and so on, and then smaller players. Do you think, when we talk about Europe now, because we are in Europe split, of course, do you think there will be the big ones will eat up the smaller ones? Is it your target to be finally, integrated in a larger bank with a bank, or you marry a bank, or marry I don't know, a big exchange? Yeah. What's your perspective business-wise?
Okay. Well, two things to say. I think from one side is a very strong message when you have big players like BlackRock, like Apollo, like Wisdom Tree, leading the way and showing the cases, and coming with, I don't know, private credit tokenization. It's 100 million feeder fund into $20 billion big, like traditional finance.
So you're putting water in the sea.
Yeah, but
it
still,
doesn't change much.
It exists. It's now a use case. They show how it's done, and then they show that it can be done in a safe way, and so on. On the other side, especially, but I think they will say much more about this side of the things. I can comment from the fintech part that we do, for example. Smaller companies can be much more agile than the big banks, for example. And then they can do the development much faster. They can adjust to the market much faster. They can deliver better market product fit. They can listen to the customers. They can put it inside the platform quicker. And then the future of fintech, but then again, I think it's very similar also here, is mergers and acquisitions.
So you see that?
Yeah.
Absolutely. So I think obviously roll-ups and consolidation, it always happens in this kind of market, but at the same time, as Ivana said, the path to innovation is usually led by smaller organizations that are more agile, then deal with larger organizations that bring size and credibility to the POCs. And that's the way we also operate. So what we try to do is that, of course, we like to work with smaller and larger partners and customers. But I think that what's very important, and I think also Fortuna is a good example of this, is having innovation alongside regulation is what this industry needs. Because regulation without innovation brings you nowhere, and this is a totally new technology and potentially, changing the history of mankind. It's quite a powerful technology, the distributed ledger technologies and the blockchain. But at the same time, so you need the regulation, but you also need the innovation. So the two things together. So having small, agile teams.
But now for your company, would you rather go and increase, scale your business, or you have a target finally to be bought by someone?
It's always a difficult question. It's all about the
price.
It's all about the price.
That's why I put it.
It's all about the price tag. So that's actually what I do for my company, is dealing with investors and potential partners and buyers in a sense. And I think that there are different ways to do this.
Yeah.
I see that we could partner up with larger players of the crypto space, but most likely, I think the natural play is to team up with larger institutions from the traditional finance space that want to get into this industry and have a certain head start. So I think that the natural evolution for businesses that are very innovative but yet compliant is to actually partner up with traditional financial institutions who will bring the scale.
So what you're saying is, you wouldn't, the marriage, yeah, which is a unequal marriage,
Yes.
is a small crypto with a traditional finance, not so much small crypto with big crypto.
Well, when we talk institutional finance, yes.
Yes.
So I think there are
Yeah.
lots of great crypto companies that team up
Yeah.
and marry, as you say.
Yes.
When it comes more to retail business,
Yeah.
I think in our line of business, which is institutional,
Yeah.
I think the interesting evolution, I mean, there are obviously synergies with the crypto entities, but I think the bigger synergy is when traditional finance companies acquire or merge with crypto innovative institutional players.
Interesting. Matteo?
I'm just gonna, mention the innovator's dilemma, which says that small companies disrupt industries, big companies do incremental innovation.
Yeah.
So you mentioned like big players like BlackRock, they just do incremental innovation. And small companies like we need to disrupt things in the market. So we need to be the ones that innovate in the market and kind of, on one side, focus on even like smaller ecosystems where there's less competition, but there could be lots of upside down the line in the future. And on the other side, kind of focus on building products that could disrupt and could be used by bigger clients or bigger traditional financial institutions in the future to enter the market, for example.
I understand that, but it's Fortuna Custody. For instance, you provide custody services to B2B or end customers, and then would you rather go with a crypto exchange or with a, build your own business, increase your own business, or marry, we said marry, yes, marriage, a bank, banks, financial institutions, pension funds, I don't know.
As an exit
strategy? Yeah, exit strategy, yeah.
I would say like we're all capitalistic here, so it all depends on the price.
Okay, interesting, yeah. So it's not a happy marriage, it's not a love marriage, it's a money marriage, yeah, okay, good.
It all depends on the price and on the future. Like, I think like for startups, they don't want to be bought and just kept in a drawer, like without being used. So it all depends on the kind of marriage. Is it a 50-50 marriage? Is it a 10-90? Is it a 20-80? So it all depends on that. And of course, like price, as we're all capitalistic.
Okay, thank you very much. I would say, as it's we are all tired, a bit. I would say we would make a stop here. Thank you very much, you three here. Thank you guys that's staying with us. We appreciate that. Huh? We shall give them applause. But for the conference, last word, if you have Cosmos and if you saw the Cosmos, any sentence of the conference, what did you learn and what did you see? Anything new, anything surprising?
I mean, for me, this is, also this panel is very, very useful for me because coming from the traditional finance, eager to find out more about the background, about the technical part, and everything. So if you want to converge towards each other and like to create added value, then we have to talk and learn from each other.
Yes.
Yeah, I agree. I think the Cosmos ecosystem has been from the very beginning very friendly with let's say institutional ready to an extent. And I think that now what I've seen also thanks to the conference is that there is actually being an active push towards institutional adoption, which I think is going to be the future of crypto in the next 5 years. And then we'll see after that. But if there is no institutional adoption in the next 5 years, I don't think crypto can grow to the point of being as disruptive as this has been over the past 5 years.
Thank you.
I would say the Cosmos tech, and especially like the Cosmos SDKs and everything, could be a very good fit for corporations that wants to build on blockchains.
Yeah.
So it's a very like easy to use and easy to implement tech for those. It could be custodians, market makers, exchanges, or etc.
Yeah.
So I would see that as an edge for Cosmos, for example.
Yeah.
And on the institutional side, maybe a DAT could be useful for Cosmos.
Yes, absolutely. Thank you very much. And the rest outside, the coffee, and also thank you guys.
Thank you.
For having us.
Thank you.
Wonderful. Thank you. Thank you. Thank you.